Hi, Rooma.
Hey Fiona, how are you?
Yeah, I'm good, thanks. Hi.
That's good.
So how does a credit card affect the borrowing capacity?
Very good question actually. I was just going to work out a calculator, so maybe if you want to
Yeah.
bring it closer, I can show
Okay.
it to you. So credit card, normally people say that, oh look, I've got a credit card worth, let's say, 20,000, but I'm not using it. So I'm only using maybe 5,000 or something. So do you want to include that in the borrowing capacity? So you have to say that you need to take the limit. You know why? Because for the banks, let's say if you have a credit card worth 20,000, the banks assume that you're going to spend it tomorrow,
Yeah.
right? So hence it's important that you put the total credit card limit in the servicing.
Yeah.
Unless the client agrees to reduce the credit card to say 5,000 or whatever, so they have to reduce it first. Yeah.
Yeah.
All right, so I'll show you how it affects the borrowing capacity.
Okay.
So let's say you've got, say, Fiona there, and we can put your surname there, and you're earning, say, 100. Okay, you've got let's say no rental property, and your hex is help. Let's say you don't have any hex debt here, so we'll just put no there. All right, then you've got let's say just one adult, meaning just you're buying the property, and all up we give you your total living expense. Just gonna put 50 50 50 there, just to give you an idea. Although living expense you have to check thoroughly, so you have to put the living expense very, very properly after checking their statements.
Yeah.
So let's say you put 50 50 and then 50. Okay, now you're going to borrow, let's say, 500,000. Your loan term, which is normal, 360, which is 30 years. So these are the months.
Yeah.
30 years. Actual rate, let's say you've got 3.4%, and it's a new loan. And loan, by the way, different banks have different calculators. I just find Bankwest really easy, so that's why I'm using it here. So interest only, we do know, and Fiona is 100% on the loan, right? Okay, let's say I get you a loan, let's say complete home loan, which is that. Okay, now here, sorry, I just so this is important part now. So let's say you've got a credit card worth, so watch this section and watch this section, right? So let's say you've got a credit card worth 20,000. Okay, see how it changed? Suddenly it changed to 1.3. Now same 20,000, the bank's going to take, see this column here, 9,168. They're taking your annual income as expense on this credit card, 9,168, assuming that you're going to use the credit card fully. But if you now change it to 5,000, see how this thing changes and this thing changes. So 5,000, that's changed only to 2 grand, and now your borrowing capacity has gone up. Okay. So the moral of the story is, if you have a credit card and it's affecting your borrowing capacity, the limit is affecting your borrowing capacity, reduce the credit card to a lower limit, to the limit which you're actually using it.
Yeah.
Yeah, you got it?
Yeah. Okay.
Very simple.
Yeah,
isn't
it is.
Yeah, it's once you check it in the calculator, it's quite self-explanatory.
Okay.
So that's how it happens.
Yeah. Thanks.
Great.